Welcome to Copper's latest opening bell report. Today we're diving into the record-setting inflows for Ethereum ETFs, what it means for institutional demand, and how the broader landscape is shifting, not just for Ethereum and Bitcoin, but for Solana as well. Investors are now holding more than 4% of Ethereum's total supply. They've basically doubled the amount of money managed in these funds in less than a year. Even though Ethereum's been lagging a bit behind Bitcoin since January, there's still a ton of excitement. Why? Well, a couple things have happened. The US passed some new rules about stablecoins, and banks have loosened up restrictions on holding digital assets. That's given Ethereum a real boost. Now, if we look at Bitcoin, ETF investors have amassed up to 6.5% of its supply, with no sign of that slowing down. But here's the real question rolling around the community right now. Is Solana about to steal some of the spotlight? It's had plenty of momentum lately, and folks are wondering if new Solana ETFs could start pulling money away from Ethereum, or maybe just attract new inflows. But so far, even with all the excitement, the split of assets between Ethereum and Solana really hasn't changed. They've been pretty much flat since both ETFs started trading side by side last August. European ETPs offer little clarity on where future allocations may go. 21 Shares, which does both Solana and Ethereum ETPs, actually has more than twice the assets in Solana. But then VanEck? They're the total opposite. Twice as much in Ethereum, plus an even bigger chunk in SUI. Switching gears a bit, let's talk about annualized funding rates. Recently, both Bitcoin and Ethereum funding rates have climbed to just over 7%, with little in between them. It's basically closing in on zero. That's noteworthy because when these rates get really close, in the past, we've sometimes seen major rallies for both coins. Of course, compared to old cycles, these rates could still climb a fair bit to merit risk/reward. About 3 years ago, our research team noticed a pattern when Bitcoin's weekly correlation with the S&P 500 spiked really high, and the correlation with the DXY is at an extreme low that sometimes signaled big price rallies ahead. That theory was actually tracking pretty well right up until the FTX crash. But now, those same signals are starting to pop up again. Maybe it's a hint of what's coming next. We'll just have to wait and see. As for stablecoins, USDT and USDC market cap hits $226 billion, a 25% increase since the start of 2025. Tether continues to corner the lion's share of the market, accounting for 71% of the key stablecoin market. Thanks for tuning in to Copper's opening bell. For more detailed information, don't forget to download our full report.